Hello, hello, everyone. It's a good morning from here, 9:17 a.m. That's local time. That's about 8:17 a.m. UTC. And depending on whatever time zone you're tuning in from, good afternoon and good evening to you all. I hope we all had a very good weekend. How's the family? How's everyone? And we are ready for yet another promising week. Okay. Well, today is going to be another opportunity for us to prepare for the new week. This is the beginning of the second half of the month of November. And of course, things are getting a little bit interesting in the market. And today we are going to be dissecting the market as usual from both technical and fundamental perspective to get a detailed understanding of how the market is thinking, and of course use that information to strategically position ourselves for the next move. Um, from what I'm seeing this morning, anyways, the market is looking as if it's in a waiting mode. Nobody wants to overcommit before the FOMC and of course the intended NFP that will be released this week. Then besides that, oil is under pressure. The Japanese yen is looking a little bit steady, even though we did not have a very good GDP from that economy. And then the US dollar is starting the week very slow. In fact, we are going to be taking a look at all of this together to have a better picture of how we are preparing for the week. So as always, this week we are going to be looking at the US crude oil market, the GBPUSD, and then we are going to look at the USDJPY, and finally, my favorite amongst them, which is the XAUUSD spot. So if you're a fan of any of these assets, or if you're willing to trade any of these assets with me this week, you do want to stay tuned in to hear what we are going to be deliberating on this one. Now, before we go in, for those of you who are joining me for the first time, you're highly welcome on board. Very excited to have you here with me this morning. My name is Sheriff Daramola, and this is what we usually do 3 times in a week, where I come on live here to share with you on the assets I am monitoring every week, and of course give you an insight into how I will be planning to take any opportunity around the structures I identify. So once again, you are highly welcome on board. So with that said here, let's dive right into the business. And as always, the first thing we normally do is to keep tabs with the US dollar market dynamic, right? Of course, we know how important this market is when it comes to these assets we are monitoring, right? Hold on a second. All right, sorry for that break. I had to attend to some technical things here. So, like I did say, we are going to be deliberating on the US dollar market, where we want to see the overall performance of the US dollar in recent times, and of course, see what may likely happen in the coming week, right? So last week we saw, okay, let's first of all start with the holistic perspective, which is right here on the 4 hours time frame. And in the last 2.5 months, we've talked about this several times, how the dollar recovered and started finding some higher lows here, giving us a couple of ascending trend lines to work with, right? And you know how we use our ascending trend lines. As long as price remains above them, we continue to look out for patterns and structures that support buying idea. And of trend line you see has been supporting that bullish momentum in the last 2.5 months for us. And going into the end of last week, we saw the dollar weaken. So let me zoom in so we can see what happened last week. So last week trading session started somewhere around the $99.70 level. See, and then we saw price find lower lows and then lower highs and then finally lower lows before some recovery happened on Thursday stroke Friday's trading session. So more or less the dollar weakened last week because traders were now expecting that the delayed US data that will be coming up this week will be showing a slowing economy, which of course increases the chances of the Fed's cutting interest rate. However, um, with this whole scenario here, you would notice that towards the end of last week, we begin to see buy pressure resume again, just exactly around that ascending trend line that we marked earlier, right? Showing signs that buyers may likely be coming back into the market. But we are not going to be um, relying on that basically. If you look at the structure, you'll see that we still have a descending trend line here, which of course supported the bearish move that we saw last week. And if we really want to think that buyers are finally taking over this market, we definitely want to be seeing price break out both the trend line there and that $99.50 level. Now, if we look at what happened this week, we saw that the momentum continued, right? The bullish pressure continued this morning. We saw this last week, Thursday. We saw this sharp rejection last week, Friday. And as soon as this new week began, just right here at the $99.27, we saw another intention that buyers are still present in this market. Now, this small bounce we see this morning is coming from some Fed officials who are sounding less eager to cut interest rate. But I'm not sure it's going to be strong enough to change the overall bearish tone at the moment, especially when we still have a descending trend line as a ceiling at this point. Now, with key economic events coming in this week, let's look at the economic calendar. We are looking at the FOMC on Wednesday, isn't it? Yes. We have the FOMC minute on Wednesday, and we also have a delayed NFP coming up this week. I don't know when that is going to be. The US economy is resuming this week after over a month shutdown, and most of these data that were not released are going to be most probably released this week. And the market is not really thinking that out any positive. So we have the FOMC We have the delayed NFP coming up. We also have, hold on a second, we have the NFP. Um, okay, so we have the S&P Global publication as well coming up on Friday. And at this juncture, traders may want to be hesitant to buy the dollar aggressively. So if this week's data come in soft, the dollar will likely weaken again, maybe breaking down that ascending trend line to incite more selling opportunities. And if the data come in stronger than expected, then we can see the bounce come alive, breaking out of that descending trend line and that key level at the $99.50 level, right? So this is basically what is going to be driving the sentiment in the market. And of course, we have a simple structure here that can help us navigate this market adequately. So we have an ascending trend line, we have a descending trend line, and of course we have a key level at the $99.50 level. So what we are going to be doing here is to exercise patience and see which structure will get broken. Is it going to be the descending trend line? Is it going to be the ascending trend line? Of course, time will tell. Now, with that information we have gathered here on the US dollar index, let's take a step into the asset and monitoring for this week. And of course, let's see how it is influencing, how the dollar is influencing them. Now, the first one on my list, as always, is the US oil spot, where we saw the market drop significantly during the first half of last week, only to pick up again on Thursday stroke Friday's trading session of last week. And if we take a quick look at what has been going on here in the last 3 weeks thereabout, it is quite clear that the market has been on a descending trend, and this is further confirmed by this structure I was able to spot here. We have a descending channel in place, and of course, it gives us an insight into the fact that may likely be in charge of this market in the last couple of weeks. But one thing I notice here is this descending channel is coming after this very strong impulsive move, which could turn out to make this descending channel become an uptrend continuation pattern where the breakout of the resistant line will give signals to buy, right? Now, to help me navigate this market this week, I have my key level at the $60 area, psychological level, as you can see. And of course, it's lining up with the resistant line of the descending channel. And if we look at things from a fundamental perspective, that is looking at what is influencing the market behind the scenes, um, we could think that oil could trade a little bit softer during the first half of the week due to the fact that Russia's Black Sea ports came back online during the weekend, easing supply fears after last week's strikes. And of course, it's important to also know that traders, market participants, and investors may likely be very cautious because Tuesday's APR report will show whether the US inventories are rising or falling, a big driver of short-term market direction. And then if we also talk about the end of the US shutdown, which could also boost demand, but market fear the returning economic data may reveal job weakness in the US. Now, if the data confirms a slowdown, expectations for a December Fed rate cut will rise. And that, of course, is going to weaken the US dollar and definitely support the price of crude oil. You know what that means when the dollar is weakened. The US crude oil being a US dollar denominated asset will definitely thrive on that scope. Now, to help me understand what has been going on since this week started, scaling down into the execution time frame, that is on the 1 hour time, begin to see things clearly. So this is what I was able to come up with here on the 1 hour time frame. So I was able to spot a range bound structure after the week started on a strong bearish note. We saw this massive engulfing bearish candle bringing price into this support line here at the $59.21 level. Now, something caught my attention after price got into the $59.21. I noticed that sellers were finding it difficult to break through that zone. And if you look at the character of all of the candles from that support level, you will see that we have multiple hammer candles there, sharp rejections, and this tells me that buyers are likely still present in this market. Now, with that seen there, immediately I bought the US crude oil. So I bought it somewhere around the $59.42 level, somewhere around here, with the hopes that it will continue to the upside. And if you look at the bottom of my screen, you'll see it's currently doing fairly well at the moment, but we're still not sure if this move is going to last long. So I already bought here with the hopes of adding more buy position if price can break out of that resistant line where we saw remember we saw this bearish engulfing candle come from that area. So if price can break out of that resistant line, it will be a good signal that buyers may take over this market. But in the meantime, I'm still holding on to this one. But as soon as price gets close to this resistant line, I will be moving my stop loss on that buy position to break even, and then watch out for price breaking out, retesting the resistant line for me to add more buy position to maximize the bullish potential I have here in this market. All right. But if it so happens that buyers lost the steam and sellers begin to gain momentum, where will be the most appropriate area for me to sell? Well, first of all, I would like to see price take out the support level. That is, take out all the buy positions here and then come back to gain as a retest of structure to continue the downtrend move. So that is the only condition that will make me sell the US crude oil, at least for the first half of this week. So I'm only selling at a retest of that structure, as you have already illustrated here, and I'm still maintaining the bullish bias right now. But if price breaks down that support line at the $59.21, I look out for a retest to join the bearish move. So that is what I'm looking at on the US crude oil going into this week's trading session. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on my watch list. Stay tuned in. All right. So I guess we'll have to move on to the next one. If you still have questions, feel free to drop them in the comment section. So moving on to the next one. So the next one I'm looking at here is the GBP USD, that is the pound sterling against the US dollar. And I was not able to share this market review during the weekend, right? So I will be taking you into a deep dive where we shall really understand the fundamental factors that is driving the character of price action, and then we relate it to the structural detail that reflects how the market is digesting that information. Okay, so what you see here on the 4 hours time frame is the fact that price action has been on a descending trend, right? The pound has been under bearish pressure. I'm not going too far in the past. I'm just going to as far as mid-September. And the pound has been under pressure as the UK's weak wage is on the table. We have GDP numbers fueling fears that the economy is slowing down as well. Also, dropping plans for an income tax increase also adds political uncertainty ahead of the November 26th budget, right? And this, of course, has softened the sentiment around the pound sterling. So, market at least 80% chances of a rate cut from the Bank of England in December, which may likely continue to drag the pound sterling to the downside. Okay. However, if US data coming out after the shutdown shows slowing US economy, it could weaken the dollar and lift the pound sterling, maybe temporarily, for the meantime, anyways. Now, let's look at the chart and see how the market is digesting this information. Now, in the last 2.5 months, it is quite clear that the market has been on a downtrend, as you can see here. In fact, I have a couple of descending trend lines to emphasize this bearish momentum. So the first one here is a thick one on your screen. The thick one for me is my primary trend line as it captures majority of the pivots, right? Then the second one, which is the secondary descending trend line, is this one right here, which shows that price action is still below the trend line. So the secondary trend line tells me that price hasn't broken out of this trend line in the last 10 months, which is something for me. And then the primary one tells me that price at some point broke out of that structure, did, and the structure became a support at some point. It dropped back again. Then we saw last week, Friday, at the upper Friday, price broke above and price still remained above that structure. Now, let's zoom into what happened last week. When we go into last week, you saw last week I wasn't able to do anything from this market. Last week, I lost a couple of trades after I took a sell at some point. I took a buy at the beginning of last week. But as you can see, the market was very, very choppy. Market was consolidating. Price was confined within the 1.32 and the 1.31 area to further emphasize the prevailing uncertainty in the market. And this usually happens when the market is anticipating major event where key players will step aside, waiting for this event to happen before making any aggressive bet. Now, if we go into the economic calendar, you will see that this is actually true. Now, on Monday, that is today, hold on a second. Oh, sorry. So on Monday, today, November 17th, Catherine Mann is going to be speaking by 1:20 p.m. UTC, and that's about 2:20 p.m. local time, right? And everyone definitely will be looking forward to this. You can see the impact of this is pegged at 7.6. So whatever she says here could move the pound sterling sharply. So if she aims at supporting or rejecting, supporting a December rate cut, it could make the pound sterling continue the downtrend. And if she talks about rejecting the December rate cut, we may likely see the pound sterling rise today. So traders are really positioning themselves cautiously, and I'm very sure they are going to be reacting instantly to whatever tone she gives today. Hawkish means that price will climb up, breaking out of the 1.32 level and continue all the way up, breaking out of that descending trend line. I mean, the secondary one to continue the uptrend scenario, right? But if she rejects, she supports rate cuts, we may likely see price drop back below the key level and that descending trend line. So now, how do I intend to trade the GBP USD? So for me, I already have a buy position triggered. You can see that at the bottom of your screen. I have my GBP USD bought around this area. The reason why I bought is quite simple. Now, though the fundamental factor supports a downtrend, right? And if we look at the overall sentiment in this market, it is bearish, isn't it? But one thing that caught my attention here is the character of price action last week. Now, despite the choppiness in the market last week, despite the indecisiveness in the market last week, the market was some way, somehow finding higher lows, resulting in this ascending trend line. Now, since price still remains above the ascending trend line, and you know how we use our trend lines, of course, we want to look out for patterns and structures that support buying ideas. Now, let's come close to what happened on Friday. Look at the character of these candles. You see sharp rejections, multiple hammer candles, and for me, that is a good sign that buyers are present in this market. So what did I do? I bought along that area and hoping to add another buy position if price action breaks out of the 1.3200 level. So I will be adding another buy stop order above this structure. Let me just do that right away before I forget. I'll just place a buy stop order right there and hoping to maximize the potential of that bullish move. So at the moment, I remain bullish right here on the GBP USD. Okay. Now, if price gets into this trend line, that is this secondary trend line we marked out here, if price gets into the trend line and buyers find it difficult to break through that trend line, maybe we start seeing something like continue selling pressure around that area. It could be a sign that buyers have lost the momentum and it's time to drop. And if Catherine Mann's speech supports cutting interest rate, definitely that should be a signal that we go bearish on the GBP USD. So that descending trend line is still very critical. So even though I have a buy position running, I'm still open to the possibility that sellers could come into play. So that is one area I'm looking to sell. Then the other area I'm looking to sell is below the 1.31 area. And if I'm going to be selling below the 1.31 area, I want to see price break down, retest that structure before I jump in. And of course, I'll be looking to add more box position at the breakdown of the 1.30100 area. In fact, if price can break down the 1.30100 just right here, this is going to be a very, very sweet move to join a bearish move. Why did I say that? Well, this is the lowest point price action got to last week. That is one. And secondly, if price can break down the 1.30100, it will also have broken down this descending trend line to further emphasize the strength of the sellers in this market. So, in as much as I'm looking to buy, in as much as I bought and I'm looking to add more buy position, we cannot ignore the sellers can also come in. So we want to be alert for that possibility as well. So of course, I will be updating us on my Telegram platform as I continue to monitor price action from my own end here. I hope I made myself very clear. If you need some clarity, you need some further clarifications, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we go ahead to the next one on my watch list. Stay tuned in. All right, guys. Do we have any questions? Anything in the comment section? Let me see. Okay, none. All right. So, in the absence of no questions, then we have no other option than to go on to the next one, isn't it? All right. So, moving on to the next one on my watch list. So the next asset I am looking at this morning is the USDJPY, the US dollar against the Japanese yen. And of course, this is one of my most promising setup for this week. Sincerely speaking, this is one of my most promising setup based on the simple structure I see here on this. I shared this with those of us who were part of the Forex market prep yesterday afternoon. I shared this with us, and let's look at it together again for the one part of that session. Now, it is quite clear that the Japanese yen has been struggling for a while now, isn't it? Because Japan's economy at the moment also showed signs of contraction. This morning we saw the GDP come in at a deficit of 0.4%. So that means the economy contracted in the last quarter. And if we compare this figure to what happened in the previous quarter was an expansion of 0.6%. So that means that activities really dropped, which is not a very, very good sign for the Japanese yen. And as a result, we're seeing the Japanese yen's potential of continuing to struggle. Now, besides that, and of course, this idea here further reduces the chances of increasing interest rates anytime soon. Now, in as much as this is the case, there's also this fear of a potential intervention from the Bank of Japan, as Japan's government is pushing stimulus and maintaining loose policy, um, making it a very, very how will I put it, making it a little bit indecisive. And this is further evident from what we saw here last week trading session, where we saw price confined within the 155 and 154 area. And for me, this is telling us something, that the market is indecisive. Majority are not willing to take any aggressive bet at the moment. So market was just trading within a range, right? And with that said here, um, um, the intervention for me, if intervention comes, we may likely see the yen increase in value, where the 154 for me will be that point where I will be looking to sell the USDJPY. Now let's look at the structure. Let's look at the simple structure I was able to mark out here, which um, reveals the sentiment in the market. So since the beginning, look at this closely, you'll see that the price of the USDJPY has been increasing, right? Now, there's something I want to call your attention to. Now, look at the first day of October. We saw that impulsive move, very massive one, isn't it? Moved all into the 153 area. Then we saw price come back again into the trend line, and then we saw the second one. Now, look at how long the second one is in comparison to the first one. So what does that tell us? It tells us that momentum is reducing, isn't it? Now, the next one happened here. And if you look at it to smaller, isn't it? And what does that tell us? It tells us that the momentum is reducing again. So in as much as the trend is rising, the trend is uptrend, but the momentum is reducing. Now look at the third one here. This one happened 2 weeks into this month. Look at it. Look at the size compared to this. Isn't it smaller? Now, the last one that happened on Friday, we can see it was even smaller, as buyers were finding it difficult to break out of the 155 area. So what does this tell us? It tells us that the momentum is gradually reducing. And with the way things are going like this, when we see something like this, it really tells us that there is something going on behind the scenes that we may not know. Major key players may have gotten an hint that Bank of Japan will intervene, possibly. I'm not saying that's going to be the case, but possibly they might have gotten that information. And as a result of that, they are positioning themselves for that breakdown of the ascending trend line. So it's not cast in stone yet. It depends on what happens this week, right? So with things are right now, I want to think that traders are scared or cautious of Bank of Japan's intervention, especially with the rising geopolitical tension involving China and Taiwan. So now markets will be waiting for the US NFP and FOMC minutes to see whether or not they should keep on holding onto the US dollar. Now, the FOMC minute will let us know if interest rate will be cut next month, and the NFP will also let us know how well the labor sector is doing in the United States, which of course will influence interest rate decision, isn't it? Now, from a technical standpoint, this is how the market is thinking. So we can see we have the 154 level. So this is my key level for this week. And you know how I use my key levels, isn't it? As long as price remains above them, I will be looking out for patterns and structures that support buying ideas. And unless price break down the structure, then can I start thinking of selling, isn't it? And except rare cases where I have explanation for that. But right here, above this trend line, it is quite clear that the market has a range-bound structure. So in preparation for this week, I was looking forward to two things. Either price breakout of the resistant line of the 155 to confirm an uptrend scenario, or price breakdown both the trend line and the 154 to confirm selling ideas. So that is basically what I'm looking at from a long-term perspective. Now, when I scale down into the 1 hour time frame to have a quick look at how market participants are playing out as the new week began, this is what I was able to come up with. So the week, this was happening this week. We can see, in fact, we have multiple AMA candles here, so it shows us buyers are still present in this market, despite the fact that we are seeing that the momentum is reducing, but buyers are still there. People are still waiting for the FOMC, waiting for the NFP, waiting for the S&P to decide if they will be holding or not, and if possible, the Bank of Japan will be intervening. So it's quite simple structure we have here. A range bound, excuse me, prices between 154.415 and 154.720. So technically speaking, we have a range bound structure going into the 12th hour of this new week. And you know how we use our range bound structure, of course, irrespective of what the fundamental factors is saying. We wait for price to either break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And if you look at the bottom of your screen, I already have the buy position running on the USDJPY, though it's not doing well at the moment. And the reason why I have the buy is basically because of the fact that I placed a buy stop order above the resistance line here, which got triggered about 2 hours ago, and prices still struggling to gain some traction from that point. So that is why I have my buy position running at that area. So let's see how the market will play out from this point. But if we get taken out of the buy position and sellers continue to build on momentum, then I will be looking to sell only at the site of the breakdown retest of the 154.415. And how do I use my stop losses here? Of course, this range bound helps us with the stop loss. So we have a range bound of between 30 to 35 pips of stop loss here. So if you are buying above the resistance line, stop loss would be below the support line. And if you are buying below the support line, stop loss will be above the resistance line of the range bound structure. So that is what I'm looking at on the USDJPY for the first half of the week. And of course, if it's evolved into something new during the course of today, I will be updating us on my Telegram platform. Let's see if there are any economic events to look out for. Okay, we have a bunch of Fed official speeches coming up today, 2 p.m., 2:30, 6 p.m. UTC. We have a bunch of Fed officials speaking, and of course, market will be trying to listen into their narrative. Is it going to be hawkish? Is it going to be dovish? And if it's hawkish, that means good for the US dollar. That means the resistance line being broken is going to be very good. But if it's dovish, then we could see price break down the support line. So let's see what happens. Time will tell on that one. If you have any question, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on my watch list for this week. Stay tuned in. All right, all right. I guess we are all on the same page. No question means that everything I've said so far has been quite understandable, comprehensible. And so all I just implore us to do is ensure that we mark out the structures on our chart, as this is what I'm going to be using to navigate this market today. So a simple range bound structure sitting on an ascending trend line, already have a buy position triggered after the breakout of the resistance line. We're hoping that this breakout will hold. It will not turn out to be a false breakout. And if it drops to the downside, we get taken out of the buy. Breakdown retest of the 154.415 will confirm selling opportunities for me. So I wish us all the best of luck on the USD JPY. So moving on to the final asset on my watch list for this week. So the final asset I'm looking at for this week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. I also shared this with my Forex market prep followers yesterday afternoon, where I shared the details of what I'm looking at and how I will be navigating this market for this week. And of course, I can still explain that further as prices still within that same range that we can actually capture some good moves from here. And I have a very strong feeling that price is really going to move very big this week. And all we need to do here is strategically position ourselves in such a way that we can catch that move when it happens. So, with a quick picture of what is going on here, going to as far back as August of this year, it is quite clear that the momentum is bullish. Price has been finding higher highs and higher lows. In fact, during this period, it also hit an all-time record high at the 4,380. And as a result, I do have multiple ascending trend lines that will be helping me to navigate the market this week. Now, beginning of September, you will see that we have a trend line, and price action has been respecting that trend line since the beginning of September. And at no point in time have we seen price break down the trend line, telling me that this is a very strong ascending trend line, right? And you know how we use our ascending trend lines. As long as price remains above them, we continue to look out for patterns and structures that support buying ideas, right? Now let's zoom into the current structure, especially after price tested that all-time record high at the 4,380. So when price tested that level, one thing I noticed here is when price retraced, we saw how that psychological zone at the $4,000 continued to serve as a support line. Every time price comes in here, we see buyers take over the market, pushing price to the upside. Look at it right here. We saw the same thing happen here during the second half of October. And then between the final 20 days of October and the first week of November, the market was more or less choppy, indecisive, and continued to oscillate around that $4,000 area. And you will see that every time sellers try to break through that $4,000 level, it failed. Though price moved a little bit far, but it didn't last long, as we saw price coming back up again into the $4,000 level, which for me is a sign that this level is going to be very crucial. And on Friday of the first Friday of this month, we saw another move into the 4,200 last week's trading session. And one thing we noticed is how the 4,200 level continued to serve as a resistance line, pushing price back into this zone last week Friday. Now, the 4,200 level being a resistant line, you'll notice that this happened during the midweek Wednesday stroke Thursday trading session of last week. And this was exactly the time where Fed officials were pushing out the narrative that cutting of interest rate next month is not guaranteed. And this further capped the uptrend scenario around the gold commodity, pushing price down as markets were not willing to be aggressive buying gold going into last weekend. And this resulted in price coming back into the $4,050 level with a sharp rejection. Let me zoom in so we can see that sharp rejection there. Look at it right here. We saw a sharp rejection on the 4,050, and that for me made me use the $4,050 level as my key level for this week. And what does that mean? As long as price remains above that level, I want to be looking out for patterns and structures that support buying ideas. All right. Now, scaling down into the 1 hour time frame to see how the market is behaving around that structure, you will see that gold is looking a little bit slow and heavy this morning as the dollar picked up in strength a little bit after Fed officials signaled hesitation about cutting interest rate next month. In fact, I want to add a buy position right now on the gold before I even go any further. Yeah, so let me just quickly put a buy position on, then I will explain to you why I am doing that. All right. So back into structure. So scaling down into the 1 hour time frame, this is what I was able to come up with here. So let me zoom so we can see things more clearly. So we can see the week started on a bearish note. Gold was moving slow, heavy as the dollar gained some momentum following the Fed officials' hawkish narrative into last week through the session. But concerns about the slowdown after the long government shutdown may continue to support the price of gold. And as a result, investors, market participants will be looking to buy on dips. So that means when price retraces back into structure, we are likely going to be seeing some buying activities. And we saw what happened this morning here. This one moved up here, and then it came back again. This is another dip here, and we are likely going to be seeing some buy starting from that particular level again. And as a result, I had to place a buy immediately at that point. And of course, stop losses, if you can afford close to a 200 stop loss on this one, make sure you calculate it in such a way that your position size and your risk is not going to be more than something that your emotions can actually manage. Okay, now before we even get too excited about this, it's important that we also know that traders are going to be very, very cautious around this area. So that means that we are not really going to see, we may not, let me use that word, we may not really see a big time move. We may see price just maybe come to resistance line, come back, go up, down for a while. And if we look at the distance between that and that point, that's about 200, close to 300 pips, which is something we want to capture. And the reason why I said market may look like that is simply because investors may want to sit on their hand until the FOMC minute is released and the NFP is released on Thursday, which could bring clarity into what is going on in the US economy. Now, weak US data will definitely boost the gold as rate cost expectation will rise again. But if the US data comes in strong, we may likely see price break down that key level at the 4,050, which will be a sign to take some sell positions from that particular level. So, but in the meantime, I maintain a bullish bias. Why? Price remains above the ascending trend that was plotted on the 4 hours time frame. Secondly, price still remains above the key level at the 4,050, and chances that the data from the US will come in weak is also very high. So what we are going to be doing is to look out for buying ideas as long as price remains above the 4,050. and $50 level. So that is basically what I'm looking at on the XAUUSD. So I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. All right, everyone. So I guess we are good to go. We are all on the same page. Hope you've mapped out the structure accordingly, and let's allow this structure to help us in navigating this market today. So it's time we wrap it up for today. The markets is we've been able to identify simple structures as the market tried to rebalance their position ahead of the major events coming up this week. And of course, this structure here we're definitely going to be using to guide our decisions today. Hope you are able to mark them out. Please do. And all we just need to right now is exercise patience and allow the structures to mature. Okay. And always remember, every decision we make in the market is more or less an educated guess until price hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. And for those of you who are joining in for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, why not join us in our subsequent edition? The next one is on Wednesday, where we shall be coming here again to review how well these assets have done and of course prepare ourselves for the second half of the week, which where I think we are going to be seeing some strong volatility in the market. All right. And for those who are just joining in, of course, you have the privilege of watching the replay of the live stream immediately after the session ends. All right. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.